Hey everyone, Kevin Lewis here with Home Life Benchmark Titus Realty, and it's time for your November 2022 Fraser Valley Real Estate Market Update. October 2022 saw much of the same as we've seen in September and August of 2022. Low sales, especially compared to the 10-year average, and way more compares to just a year ago. So we have fewer sales happening now, and listings are a little bit below the 10-year average, but they're actually quite close. So altogether, the market is still declining in prices, which again, as we've touched on many times previous to this, is directly tied to the interest rates continuing to increase, which did happen once again in October, and we'll probably see those prices continue to fall due to that into the month of November, and once again through December, where there's probably going to be another rate hike. With a total of 860 sales for the month of October 2022, we came in about 42% fewer sales than we'd expect to see based on the 10-year average for the month of October. So that's quite low comparative to what we expect to see, and we're 54% below just last year, which October wasn't really when the market was going absolutely crazy. It had started at that point, but it wasn't the absolute peak by any means whatsoever. However, we're 54% below that. We are, however, 2% increase in number of sales compared to September. Now, if you look historically from October compared to September, October almost always does outperform September, so this really is not a big surprise by any means whatsoever. As far as new listings for the month of October go, we did see numbers go up quite a bit compared to what we've been seeing lately, and we are continuing to build back that inventory to have a nice balanced market that everybody would benefit in, and in the balanced market. With 1,977 new listings coming to the Fraser Valley, we only saw about 10% below the month of October. So when we have 42% fewer sales than the 10-year average, but only 10% fewer new listings than the 10-year average, that tells us that we're probably going to build inventory at a higher rate than we would usually build in this month. Building that inventory, once again, is going to continue to keep prices relatively stable. As we've touched on many times and even hinted at a little bit at the beginning of this video, that stability is not necessarily going to be in the price. The stability is in your monthly payments and your affordability of what home you're actually able to purchase. So we've touched on this. I'm not going to get into the details of it, but as house prices have come down, interest rates have gone up, and on a 20% down payment, monthly payments have stayed relatively similar. So with this increase in total number of listings available and the decrease in the total number of sales happening, we're continuing to build up that balance. We may push into a buyer's market for a few months over the winter here, as the winter is typically going to be the slower time of the year anyways, when fewer sellers list their homes. They don't want people coming through over the holidays when they're relaxing. Buyers aren't out as much in the winter. They're still out there looking, and the right buyer at the right place could happen at any time. But a lot of buyers are not going out when the snow's on the ground. They're going to wait for spring for the sun to come out and the real spring market to pick up. So if you're thinking about moving in the next few months, I wouldn't say it's a bad idea whatsoever. We just have to recognize what the historical trends always are throughout the winter. Things just tend to take a little bit longer to happen, but you're not necessarily doing yourself a disservice by selling in the winter compared to the spring. Now, what we know about the winter now and the market right now is what's happening today. What we don't know about the spring is where the market's going to be by then. So if you are going to wait, you have to kind of ask yourself and understand that you are rolling the dice a little bit. The recent trend has been that prices are going down. So based on that trend, if you're going to wait to list your home till spring, if prices continue to go down over winter, even if spring sees a little bit of a recovery in price, we kind of have to look at it and try to figure out whether or not that increase in price is going to bring us up above where we are in prices today, if that's your goal to sell for the maximum dollar, which it always, of course, is, but we have to look at the big picture of things and what you're buying into next as well for affordability. So it's really not just as simple as buy at the lowest price, sell at the highest price, because interest rates have an effect on everything, and we have to look at the big picture of things. Now this month, we've been digging into some examples of some different scenarios over the last few months. Last month we did the decrease from March prices to today's prices based on the interest rates changing and everything, and how the monthly payment stayed relatively similar based on a 20% down payment. Today we're going to talk about the down payment amount and how the market affects that. Now, I shouldn't say most, but a very large portion of people doing real estate transactions are selling their current home and upgrading to a larger home for themselves and their family to grow into. Now, if that's the situation you're in, you may say, okay, well, prices are coming down. We'll let prices come down and we're going to buy in with the lower prices. We're not in any big rush. Now, what we have to stop and look at is the down payment money. Because the down payment, we typically have a goal, most people, of getting that 20% to avoid the insurance on a less than 20% down payment. However, I don't think there's anything wrong with going less than 20%. But let's just use that 20% as a goal in order to amortize over 30 years and have lower monthly payments, basically. So let's say that you're planning on selling your current home and all of your down payment from your next home is just going to come from the equity in your current home. So let's just say, for example, that you $300,000 owing on your mortgage, your home is currently worth $500,000 today. If you take that money and you take the sales, ignoring all the fees and everything, we're just doing simple numbers here, you're going to walk out with $200,000 cash towards your next purchase. Again, let's just ignore the pre-approval amount that you're approved for, and we're just basing things based upon your down payment amount, making that 20% down payment. So if you had that home at $500,000 value, you $300,000 mortgage, you walk out with $200,000 cash, that's 20% of $1 million. So now you're basically, again, ignoring the pre-approval process, you have 20% down payment for $1 million purchase. Now, using that same home where that was worth $500,000, if we're going to wait a couple months and say the prices of that home come down, yeah, so are the prices of that $1 million home that you were going to move into, but let's say they come down at the same percentage of about 10%. So 10% of 500,000, you're going to net 450,000. So now you still have 300,000 owing on your mortgage. That number's not going to change. Well, it'll change by whatever your monthly payments are based. But let's ignore that number because it's a very small number. We're looking at this. You now have $150,000 for your down payment instead of $200,000, just because the value of your property dropped $50,000. Now let's say that $1 million home dropped $100,000. Well, let's take a step back. Remember, we said that in the $500,000 sale, you're going to have $200,000 cash. Now, the $450,000 sale, when you waited an extra 2 months, you're walking out with $150,000 cash. Once again, if that's your entire down payment, $150,000 is a 20% of only $750,000. So by losing $50,000 in value, you actually lost $250,000 in your ability for your down payment to make that 20%. So we have to look at things from this picture. Now, I understand this is a little bit confusing to listen to. I have written the example out in the newsletter, in the comments below and everything, so you can check out the written version of the blog here, and that's going to have a better description. And if that's still something that's confusing or something that's intriguing and you want to have a chat with me about it, by all means, give me a call, 604-218-5635. Leave me a comment below. I can draw up an example and show you with the numbers while we're doing it, and it'll make a whole lot more sense. All in all, the market is a little slower than we usually expect to see this time of year, and we know what's going on with interest rates continuing to rise, bringing prices down, borrowing becoming more and more difficult, and just the general feel of the market is that people are a little bit reluctant to get into the market at this point in time. Now, I wouldn't necessarily say, as my example before, if you're going to sell and upgrade to a bigger house, you're better to do that sooner than later. If you're going to be buying into the market as a first-time buyer, you kind of have to watch what the interest rates are doing versus your borrowing amount and what you're able to get into. Because if the interest rates go too high and the bank's stress test goes up and suddenly prices don't come down quite as much as what you're hoping they do, and interest rates have gone up more, you might be putting yourself in a worse situation. Now, I wouldn't say as a first-time buyer that you should rush into anything by any means whatsoever. You should take your time, make sure you're getting and vetting the property properly to make sure that you're getting a good investment. However, if you find that right property, I wouldn't be hesitant to pull the trigger on that just because we don't know what the future necessarily holds. So all in all, despite the slowness of the market, I still think it's actually a pretty decent time for most real estate transactions to happen if that's the right time for you. I say always, whenever anybody asks me when's the best time to buy or when's the best time to sell, it's whenever the best time for you is. We can time the market with everything, and if you're a really savvy investor, then yeah, we can put a little bit more timing into things by understanding that trying to time things has risk involved in it as well. We know what the value of things are today based on very recent history. We don't know what tomorrow holds. So the simplest term is the best time to make that move happen is when it's right for you, especially if you're going to be selling and buying, because things do remain relative. Now, of course, everybody's situation is going to be unique, and I don't treat everybody, it's not one paintbrush for every single client I have. It's different strokes for different folks to make sure that the plan that we put together works for you and your family and your unique situation that you're in. So again, give me a call, 604-218-5635. I hope to hear from you soon.